Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. We'll start it off with the Apple earnings, which responded well. The market bulls responded well. We're up about 6% at the close of after hours on reaction to that, and that's a great sign for the market bulls. Remember, we're in a market environment that is favoring the bulls on the last month of the bounce that we've been seeing, and it's up to the bears to prove themselves to derail the bulls' momentum and see weekly consolidation. At this point, it's not happening. Apple bulls responded. Tech sector names are responding bullish as well. Pretty much all the major tech names are up slightly more than where they closed today because of the reaction to the Apple earnings. So now we're looking at the Fed tomorrow at 2 p.m. Eastern. That's going to have a short-term impact on the market in terms of a spike in volatility. And as far as Apple goes, we'll look at, right now we're trading at about 163. So looking at 163, that means we're going to open up at, I should say above, any resistance level that we've seen in the last month and a half of trading. So the next level that I'm looking at is up at 167.53, and then we're looking up at 172.57. So significant continuation of this bounce. Apple was one of the weak tech sector bounces over the last month, but now playing catch up in response to these earnings. Also worth noting that, the revenues did drop for the first time after a steady increase in revenues. Q1 after Q1 for the last decade, it did drop, but obviously the market is not too concerned about that. So here's SPY still within our 7-day now trading range. Again, 260.66 and 267 is our range, and that's our line in the sand. If we don't break 267 or 260.66, then we can anticipate that the action within this range might be a bit choppy. There's probably going to be more fake outs on the hourly time frame. And right now, SPY after hours was trading close to the high of the day in the low 264s. But again, it's going to be up to the Fed to either see a clear bull reaction and a break at 267 or a clear bear reaction and a break of 260.66. If we do not break either of these ranges, we're sitting on our hands patiently waiting for clarity of direction. So right now there's a couple different scenarios on how things can play out. We have more tech sector earnings to come: Amazon, Google, Facebook, other big names. One scenario is we have the tech sector continue bullish and the market response to the Fed bullish as well. That means we have clarity and direction, both going in the same direction. We have the financial sector, which is going to be responding the most significantly to the Fed, and of course the tech sector to earnings. The other scenario is they both go bearish, and the third scenario is one goes one way and the other goes the other way. That's the least favorable scenario for traders because it has the most tug-of-war action, the most choppy action, and the least amount of clarity. We want to see both sectors, the tech and the financial sector, going in the same direction. So that's what I'm keeping an eye out for. Right now, both Netflix was slightly bearish, but at this point, the tech sector is remaining bullish. So if the tech sector keeps this up and we have Facebook bullish reaction to earnings and Google and Amazon, then we're going to watch to see, can the financial sector respond bullish to the Fed at 2 p.m. So just be aware that we want to see both sectors going in the same direction to have the most clarity and conviction in the market as traders. And if we're going in opposite directions, it's not going to be as clear or as easy. So clear range on SPY, IWM, clear range remains as well. We've got support here at 143.46, resistance of 147.92, waiting for a break of that range. QQQ, we came close to a support break today, but QQQ is up $1 after hours, so that's going to help the bulls out to stay in this channel as well. 160.32 support, 166.02 resistance is the current channel that we're trading within. Financial sector remains more bullish because we have the higher low and higher high. We can't draw the same kind of channel that we can on everybody else. New daily higher low is 25.71. Also looking at 25.44 as two key support levels, anticipating a significant reaction tomorrow to the FOMC minutes at 2 p.m. Eastern. VIX on the daily time frame. So we held support of 17.17 and we bounced, and now we have a daily inside bar. Break of 18.42, double bottom the last 2 days would be bearish and have us looking to 17.31, and a bull break of 18.46 has us looking at 2042 and 2202. US oil on the daily time frame. This is a scenario where we set a daily lower high and lower low and saw no follow through. We have a double top of resistance at 53.91 and then 54.30. But when you change a trend and you don't see follow through on that trend change, you zoom out and look for flags, whether it's bullish or bearish. So here we're looking for a bull flag on the weekly time frame because the daily loss of support saw no follow through from the bears. This is still the potential of the inverse head and shoulders pattern. With the left shoulder, the head, it would just be a very mini right shoulder, still establishing a new higher low of support. And then if we get that bull break of 54.30 and 54.54, that changes the weekly trend and puts the bulls back in the driver's seat of oil for the time being. So watching this healthy daily consolidation, no follow through on the bear break. At this point, we have to break 51.31 more convincingly for this weekly time frame to not be a bull flag. But as of right now, that's the current shape that the oil market is in. Natural gas broke support 2906 was key support. We broke that level, but the bulls did buy the dip. So now we're going to be watching, can we get any follow through on this bounce? $3 psychological resistance is a double top, and we're looking at 318.1 after that on the daily time frame. Anything on the daily under 318.1 is just a lower high. So that's the most important daily resistance level to be watching if the bulls are going to try and change any kind of daily trends. Certainly keeping an eye out for the bulls to try and defend this support level a bit more significantly like they did today, but we don't have any follow through at this point unless we can get over the $3 double top, which currently still stands as resistance. So bottom line, bulls in full control of the market still. We're in a 7-day sideways range. The tech sector is having an initial bullish start to a heavy tech sector earnings week. Fed is tomorrow at 2 p.m. Eastern. We're going to be watching the financial sector with a significant reaction. The financial sector bulls are in full control. Yet again, it's up to the bears to prove to us that they are shifting momentum and changing the trend. And if that does not happen, the market bulls remain in complete control. I appreciate you watching. We'll see how it all plays out tomorrow. Have a good rest of your night.